Varun Goel as well from Mirae Asset Investment Managers and find out what he's making of the market right now. Varun, hi, afternoon. Good to have you on the show. Varun, the market had a rather, short-lived reaction, if you will, to the RBI policy. I mean, come today and the rate sensitives are already lackluster.
Yeah, good afternoon, Aisha. Thank you so much for having me on the show. Our sense is this front-loading of monetary easing by 100 basis points of rate cut will go a long way in ensuring there is a strong cyclical recovery as far as India is concerned. And if you combine it with 1 lakh crores of tax cuts that the government has given, I think we look set to see a significant rebound in economic growth. So our sense is cyclical parts of the economy, be it banking, NBFCs, real estate, capital goods. These are some of the sectors which will benefit from the significant easing that has been carried out. And hopefully, FY26 should be the year of revival of earnings growth after a very muted FY25, where benchmark earnings grew in low single digit. We believe this year the earnings will revert to the long period average. We expect somewhere between 12 to 13% earnings growth for Nifty 50 companies, and hopefully, the outlook for the economy and the market remains positive.
Okay, so that's the take on the reaction to the policy. But Varun, hi, this is Snehi also joining in. Given the kind of volatility and the sector churn we're seeing in the market right now, how is your portfolio placed? What is the positioning and how are you approaching some of these very volatile spaces like financials that have been doing very well over the last couple of weeks but are seeing a little bit of a profit booking today?
Yeah, good afternoon, Snehi. I think if you look at for the next 6 to 12 month perspective, we expect a strong earnings growth. I think NBFCs clearly should be the biggest beneficiaries early on because we don't expect any NIM compression for them. I think first of the year, the banks should see some NIM compression, but that should start coming back as the rates get passed to the borrowing side also. So broadly, I think second half of the year should see strong earnings growth even from the banking space. So we remain quite constructive on the overall lending ecosystem. I think if you look at the overall non-lending side also, be it capital markets, exchanges, depositories, that will also benefit from a significant revival in the capital market activity. As I was mentioning, the capital goods space also looks set for a strong earnings momentum. Our sense is this cycle has much longer legs, and we should see.
I believe we have Varun on a patchy line. Do we have Varun back with us? If we do, we can. Yes, so Varun is back with us. Varun, please continue and finish that point you were trying to make.
Yeah, so I was saying cyclical parts of the economy should continue to do well. Our sense is even on the real estate side, we're still in the mid-cycle, and hopefully we should see another 2 to 3 years of strong volume growth led by a decent pricing action. So I think overall the economy should benefit as the mortgage payments, as your monthly loan payments for your car loans, auto loans, personal loans comes down. The economy should see a revival in economic activity, and most of the cyclical sectors should benefit.
Cyclicals, that's what one is betting on. But, just taking stock of the market today, just going to bring up some of the other movers. Some of the mid-cap IT names are doing quite well. So an Oracle Finance, for instance, a Persistent, they're the ones which are seeing a fair amount of traction as we speak right now. And that's where you're seeing some meaningful moves as well come in. Kunal, we were chatting about some of those mid-cap IT names, right? OFSS, and I think you pointed this out also earlier in the morning, and then Persistent. You think the strength will stay?
Yeah, it seems like, in fact, we are now looking at many of the mid-cap IT stocks actually showing signs of a price volume breakout for themselves. So it's not just, OFSS, looking at the mid-cap end, FSL, First Source Solutions, then you have, Reddington, many of the other names, Persistent, Coforge, etc. They were showing signs of good strength, throughout the day. And I think that's a strong indicator that we are looking at a potential revival for, the Nifty IT index, as well as more keen towards the Nifty mid-cap IT index. And also the large-cap IT stocks. So you saw, I think, Infosys coming back to that 1,500, 1,600 kind of a mark. You've, TCS, which has been showing signs of strength for the last 3 consecutive days. And I think that's a strong signal that we are looking at a potential revival for many of these IT names. So I believe from a near-term play, we are looking at a point where the markets are getting poised for this sector, which has been a huge underperformer. I think could now try to at least cover up a major part of the underperformance.
Okay, so that's Kunal's positioning on some of those stocks. But Varun, coming to you, help us make sense of the AMFI data that we've seen today. It's only the overall AUM that's looking quite healthy because you've seen a fall coming in funds towards equity AUM, the broader end of the market. So your schemes from mid cap, small cap, flexi cap, they've all taken a knock. What is this telling you about the sentiment in the retail space of the market right now?
I think broadly, if you look at the medium to long-term outlook, we believe this shift from physical savings to financial savings, that's a longer-term trend. And while there may be some hiccups on a monthly basis, but broadly our sense is, the trend will continue. So we remain constructive on capital marketplace like exchanges, depositories, mutual funds and brokerages, which we believe should see decent earnings growth over a medium to long-term perspective.
Right, okay, that's the take coming in right now on how one can read that data. In fact, I don't know if we have our researcher joining in to try and dissect what the AMFI data has been. We'll get to that in just a bit. But the one stock which has been focused has been Jindal SAW. It's been investing about $118 million in UAE as well as Saudi Arabia for their expansion plans in pipe manufacturing. Which is the company and what exactly are their plans? Ashisha is here with more.
Jindal SAW is soaring in trade today on the back of those capex plans that the company has announced, totaling 2,000 crores. Now, this is divided into three parts. The first and most important one is the company that they will be incorporating in Abu Dhabi, UAE. This will entail an investment of about $105 million, which translates to about 900 crore rupees. They say that this is for setting up 3 lakh tons per annum seamless steel plant in Abu Dhabi, and this will be done over a period of next 12 to 36 months. Let's also talk about the other two elements of these capex plans that the company has announced, which totals to about 100 crores. One is a joint venture with Buhur Investments, about $10 million investment, 85 odd crores, and the other is for ductile iron pipes. This is again a joint venture where the company will be having 51% equity stake, and the investment here will be about $10 million. Let's also talk about their healthy order book position. Currently, their order book stands at about 11,300 crores, which translates to 0.54 times of their total sales for FY26 as estimated by brokerage houses, and nearly 23% of their total revenue comes in from export orders. So export outlook continues to remain very important for the company, and now that the company is also expanding into overseas markets. Let's also talk about a couple of other aspects for the company. Remember, the company has been focusing on reducing their debt, and consequently interest costs has also come down. So debt has come down from about 3,820 crores at the end of third quarter to about 2,900 crores at the end of the fourth quarter, and consequently interest expense has also come down to about 140 crores. So company focus on deleveraging and reducing their interest costs has clearly come down over the last few quarters. Let's also talk about their guidance that they have given for FY26. Remember, it reported EBITDA margins at 16.5% for FY25, but they've guided for margins to be in the range of 19 to 20% for FY26. So the outlook on margins continues to remain very strong. Now, there are several other triggers which the company is very positive about. One is the Jal Jeevan mission, which the company believes will aid volumes for the company. But before that, they're also looking to expand their capacity. So ductile iron pipe capacity is likely to increase to 100 KT by FY26, and seamless pipe capacity to increase to about 450 KT by the end of this fiscal. As I was mentioning, Jal Jeevan mission orders are likely to intensify for the rest of the year. Capex and global market continue to remain very supportive, because of which volumes could see an uptick in this financial year, and the management outlook also continues to remain positive. So the management has said that water, oil and gas volumes are expected to pick up from the second quarter of FY26. So for today, the company has announced capex plans worth 1,000 crores, because of which the stock is gaining in trade. But remember, management outlook and guidance for FY26 also continues to remain very positive.
Okay, Ashesha, thanks for all of those details. But Kunal, talking about Jindal SAW, it's basically a stock that's just come into limelight out of nowhere, right? Last 6 months, the stock is lower by about 25%. But thereafter the recovery we've seen on the stock last 1 month, last 5 days. In fact, the stock is up 16% in the last 5 sessions itself. Today, another 7%. How sustainable is this move that we're seeing on the charts for Jindal Saw? Because I understand that the news flow is massive today, but on the charts, after the cut we've seen in the last 6 months, where is the stock headed now?
See, there are two ways in which we analyze the stock. One is if the news flow was expected, then the volume built up would have been gradual for Jindal Saw, but that was not the case. In just the last 2 days is where you've seen a massive volume jump for the stock, and the stock has moved from 220 thereabouts to now 250-ish levels for Jindal Saw, which means that this has come as an unexpected news flow for the stock price. Now, eventually what happens is post that we expect that the stock for at least a week or 10 days remains into a bit of a mean reversion phase. But then, such kind of a strong, surprising news flow generally triggers a major round of upside into stock prices over the next, many months. So I believe that there should be a two-pronged approach for Jindal Saw from current levels. One is on a very short-term basis. You might expect that the stock may try and cool off, come back to the retracement of 50-day moving averages, say closer to 235, 240 kind of a range. But then on the upside, I think from a positional play, there are higher targets which open up for the stock prices, and then we could be looking at 275 to 300 as a potential target range for the stock in the next 3 to 6 months.
The other buzzer today, of course, has been Grasim. Morgan Stanley has upgraded the stock to now an overweight from the earlier equal weight and upgraded the target price as well, all the way to 3,500 on the stock price, and that's something that the street is liking. Vinay, your thoughts on how the charts on Grasim are looking?
Yeah, so from the 200 days moving average, it has bounced back, and from the level of 2,500, it has come up to 740 today. So nice recovery from the lower level, and important thing is that it has bounced back from the longer term support. So now the stock is placed about 20, 50, 100 and 200 days EMA. That itself indicates that it is into a bullish trend on all time frame. So no doubt it is very strong on the chart and headed towards its all-time high. The all-time high is placed around 2877. So the quite strong setup on the charts for the large cap stock like Grasim, and the trend is clearly up. So definitely we should remain with the trend, and the way it is going after some consolidation or zigzag move, ultimately I'm expecting this stock to register a new all-time high about 2878.
Okay, so that's the take on Grasim. We have some news flow coming in from United Spirits, wherein the company is said that the reports on RCB stake sale are at best speculative right now. The company has also clarified, saying that they're not pursuing any such discussion. This is, of course, in light to the statement that has been making the rounds earlier in the day, wherein they're mulling. The statement was, the reports claim that the company is mulling some stake sale in the Indian cricket team of the IPL, that's Royal Challengers Bengaluru, in which Diageo holds the stake via United Spirits. And now you have the company statement saying that these talks are all speculative and there is no such discussion at the moment. This is the clarification coming on by them on the potential RCB stake sale. Varun, what are you making of the entire Alcobev space in India right now? I believe this is a sector that we've not spoken about in a very long time, given the outperformance we've seen by some of the defensives or some of the broader market themes right now. But Alcobev is a space that has currently largely been unaddressed ever since we've seen limitations, caps and policies coming out of Telangana. Do you believe all of that is behind the Alcobev space and now good days lie ahead?
Well, I think within the consumer space, this is clearly one area where the underlying volume growth has been a lot better. If you see, in the last year, I think for the first time in almost 17, 18 years, the consumer staple companies, as a whole, as a sector, delivered a degrowth. So clearly, things were fairly challenging from a consumption perspective. But I think alcoholic beverages space definitely stands out. Our senses, with 5-6% volume growth, with 5-6% kind of pricing action, these companies could deliver a double-digit kind of a growth for the next couple of years. Also, I think there is a Andhra Pradesh market opened up last year, so the benefit of that opening up would also be available to most of these companies going forward. So we remain quite constructive in this space in the medium term.
Maruti, that's the stock that I just want to bring up for you on your screens. It's currently down about 1%, and the management is now saying that they're going to be cutting their production for EVs to now, I think, by about 2/3. Yeah, they're going to be cutting production of their first EV by 2/3 in April to September quarter. And there are more clarifications coming in. They're looking to produce about 8,221 e-Vitaras in April-September versus 26,500, which was planned earlier. But they are looking to ramp up production in later months to meet the full year target, that of 67,000 units. So that's only for their e-Vitara that they are looking at this little bit of a cut down in production. If one were to really link to it, perhaps it could be because of the rare earth magnet curbs. But then again, the management of Maruti has gone on record saying that they actually see no impact till July, at least, from REMs, and they don't expect any production impact in June, July, because their import applications are already filed and the approvals were awaited. So I wonder why this cut in production. But Varun, what is your own sense on how much of an issue could rare earth magnets turn out to be for the EV space in particular?
Well, I think that's something that the government of India and various OEMs are working on, and I'm sure some solution will be found. I think from a medium to long-term perspective, it is important that we have some kind of production set up in India. So I think that's the really the way out from a medium to long-term perspective. In the short term, I guess various countries are kind of negotiating based on their own intrinsic strengths, and gradually India will need to kind of build this strength. I think as in the short term, if you look at the overall passenger car space, there clearly seems to be some slowdown in demand. I think overall there are two trends which are playing out. One is the shift from ICE to EVs, and then within ICE, also the shift from smaller cars to SUVs. And I think those companies which are geared towards that, will benefit in the short to medium term from a demand perspective.
Yeah.
Okay, so that's the take on Maruti on the back of this entire rare earth metal issue. The flashes are on the bottom of the screen, wherein they've announced a cut in their e-Vitara models from the EV space. But Kunal, what are you making of the rest of the sector when it comes to the auto pack? Today, auto is absolutely flat, but if you take a look at this sector on a year-to-date basis, it's done pretty okay for itself, up 4% year to date. Names like TVS, Eicher, Ashok Leyland have done pretty okay. Is this trend something that looks supportive on the charts going ahead as well?
Yeah, it should be more segregated towards very few stocks which could perform, going forward. 2023-24 was mostly most of the auto stocks they had participated. So whether it was M&M from 700 to 3,000 levels, Tata Motors from 150 to 100 levels to 1100 plus mark. And then same kind of a rally which was there for the other auto stocks, Bajaj Auto, Hero MotoCorp, etc. Now we are seeing a phase where out of the 10-11 prominent names on the auto pack, we're seeing just about 3 or 4 better performers. I would not say even top performers which are there. Even if you look at this on a YTD comparison or on a net basis comparison with other sectors, auto has not performed very well, and the reason for that is because many of these stocks are still into an underperforming zone. Now that generally happens when the sector is played with a lot of news flow surrounding itself, which makes difficult for the underperforming stocks to find any kind of a strong momentum as well as a follow through up move. So I think we could be in that phase for the auto stocks going forward, but I would still believe that from a positional long term play, this corrective opportunity should be taken as a good buying or accumulative phase for stocks like Bajaj Auto, Hero MotoCorp as well as Tata Motors.
Well, what's down today is also DMart. Bring up that stock price for you, and there's been a 10 lakh share block deal also which has happened today, so perhaps that's why you're seeing that weakness trickle in. But Varun, what is your own sense on the traditional physical retail formats?
The physical and the online and the quick commerce channel will continue to coexist in India. I think there is a large convenience factor which continues to be at play. So I think as far as the retail sector is concerned, we believe that while the share of e-commerce and the quick commerce may increase, but the physical channel will also continue to exist. And as long as the value proposition which is offered by the standalone retailers is strong enough, I think they will continue to thrive. So broadly, I think it's a great play on the India consumption story, and we remain constructive on this space.
While we're talking about losers in today's trade, Avenue is down 2%, but the shade of red on Maruti seems to have intensified right now. Let's just pull up the chart on the back of this news flow that we've just received, wherein they're looking to slash a part of their EV production for e-Vitara, and the stock is lower by about 1.1% right now. We have Shrishti who's joining in to make better sense of these numbers and the impact that the overall financials of the company could have on the back of this move. Shrishti.
Well, yes, Maruti Suzuki, as per agencies, we are getting to understand that the company is it's planning to cut its EV production by two-thirds. What was actually planned for the full year, and this time for e-Vitara, that is the new EV offering by Maruti Suzuki, yet to hit the roads of the Indian markets and the overseas market as well. For the full year, the company was actually planned to produce around 67,000 of units, but for now the company can actually go ahead with a production of almost 8,221 e-Vitaras between April and September, and that will be cut down by two-thirds of its initial target, which was decided at 26,512 units. These, as per agencies, is what we are getting to understand. Because do remember, e-Vitara is the new offering for Maruti Suzuki, and majority of the production was actually used and was actually rather planned to be used for the overseas market as well. So that is indeed negative, what we are getting to understand for Maruti Suzuki in the short term, because the other factor which has been highlighted in the same report, that does say that Maruti Suzuki will actually ramp up the production in the later months to meet the full year target of 67,000 units that has been decided by the company. So maybe what I am guessing is that maybe because of the rare earth magnet issue, the company must have taken such steps to slash their production target, at least in the initial months. But the good part is, which is being highlighted in the report, is that their full year target of 67,000 units of production remains intact right now. So that's the news flow we are gathering on Maruti Suzuki. As per agencies, back to you.
But Shrishti, what would you attribute this to? Because, you know, the management has pretty much gone on record stating that till June, July, they're absolutely okay on the rare earth magnets availability, and they do not expect any production disruption.
Well, yes, because Aisha, if you see, then for Maruti Suzuki, the majority of the offerings for now is ICE as well as some of their CNG models as well. It's just the hybrids, that is Grand Vitara, that actually uses these rare earth magnets. So between the pack, wherein M&M has an exposure to the EV portfolio, Tata Motors is a leader in that. Maruti Suzuki is well versed with what's really been happening within the rare earth magnet issue, because do remember, for an EV, it requires almost 3 kgs of such minerals to be used in a vehicle, vis-a-vis 100 grams of these rare earth magnets which are used in an ICE vehicle. And that too, Maruti Suzuki can actually go ahead and tweak some of its modifications, which is also a possibility not to be implemented right now, but in the times ahead, if this issue persists, the company can still look forward to this. But this EV issue and this e-Vitara issue can actually maybe, I'm just guessing, that can impact Maruti Suzuki in the times ahead, and maybe because of that the production cut has been what the company has announced. But yes, of course, we have to wait out for more details from the company. This is just as per the agencies we are getting to understand that the company has gone ahead and slashed their production target between April and September by two-thirds.
Shrishti, thanks for all of those details. So, well, that's the update coming in from agencies, where we understand that Maruti Suzuki is all set to slash its production for its e-Vitara model between April and September. But having said that, let's just once again check in on what the market is doing at this moment. And Nifty, well, for sure has slipped into the red as we speak, absolutely at the 25,100 mark. So that's where the Nifty is right now. Sensex also in the red. Nifty Bank is lower by 0.4%. So that's what is lagging the market in today's trading session. Let's take a look at the broader end of the market. Barely holding on to the shade of green is Nifty Mid Cap. I also want to take a look at what Nifty Small Cap is up to, outperforming the market with a 0.1% gain, but nonetheless it is the most move of gain that we've seen coming in the market. But having said that, Kunal, given the market setup like this, what would be your BTST trade for today, and for tomorrow what's looking good?
So I'll go with the IT stock as a buy. It's something which I discussed in the morning also. Oracle Finance still looks attractive, and I think at 9,400 plus levels would look out for now 9,700 as a target for OFSS, and stop loss could be kept at 9,300. So traders could look at a fresh buy or till the stop losses if someone is holding the positions. On the other hand, Exide Industries is something which I think is nearing a break of its 200 moving average. So this could be a breakout candidate over the near term. So would suggest a buy with 418 as a target, and stop loss could now be trailed to 395.
Okay, so that's Kunal's take coming in. OFSS and XID looking good to Kunal. Varun, coming back to you, what would be your sense of the market action that we can see tomorrow? Because you did say that, or in fact, we also had the move that we've seen when it comes to the BSE sensex expiry or the nifty expiry for that matter on Thursdays. After that, the market seemed to stabilize once again. Usually that has been the trend. Can we expect something like that to happen tomorrow as well?
No, unfortunately, I'm no expert on F&O activity, so I'm not able to comment much on that. Yeah.
Okay, well, so